Everyone wants to find the next big thing, the next token, the next sector, the next story. But by the time something becomes obvious, it's already too late. The real edge in crypto isn't predicting prices. It's recognizing narratives before they go viral. So how do you do that? How do you catch a trend before it becomes a headline? Let's start with a simple truth. Markets don't move because of facts. They move because of stories about facts. A new technology, regulation, or partnership becomes fuel, and the narrative turns it into motion. Bitcoin didn't rise in 2017 because people suddenly learned how mining worked. It rose because the story of digital gold caught fire. Ethereum didn't rally in 2021 just because of fees. It rallied because of the DeFi and NFT narrative waves. Narratives are the emotional layer on top of fundamentals, and every cycle has them. The problem is, most people arrive late. They see the price first, the story later. By the time the news hits, insiders have already positioned themselves. So the goal isn't to predict the future, it's to detect narrative momentum early. There's a pattern to how every crypto narrative grows. It always follows 4 phases: spark, validation, amplification, and saturation. Phase 1, the spark. It starts small, often technical, hidden in developer circles or governance forums. Someone launches a testnet, publishes a white paper, or drops a thread that gets a few hundred likes. At this stage, there's zero hype, just curiosity. You can't trade it yet, but you can take notes. Every major narrative starts here, unnoticed, under-discussed, but building energy. Phase 2, validation. Something happens that proves the idea works. A project raises funding, gets a partnership, or launches a live product. TVL starts to move. You begin to see serious names mention it. That's the point where early analysts start writing threads with charts and on-chain data. The noise is still low, but traction is visible. Phase 3, amplification. Now media, influencers, and large accounts start repeating the story. You see it on YouTube thumbnails, Twitter threads, and Discords. Retail attention arrives. The search volume explodes. Price action confirms it. This is where most people buy, and where early observers start taking profits. The story dominates the market's attention. Phase 4, saturation. Everyone's talking about it. You see copycat projects, next XYZ hashtags, and fake partnerships. At this point, the narrative has peaked. The smart money moves on. The latecomers hold the bag. And somewhere else, quietly, a new spark is already forming. Your job is to live between phase 1 and 2, the area before mass amplification. So how do you spot those early signals? Start with data, not headlines. Narratives always leave traces. TVL in a forgotten sector starts to rise before the news. Developer activity spikes before price. Stablecoin flow changes direction before sentiment. Use dashboards like DeFi Llama, Artemis, or Token Terminal to track category-level metrics. If one vertical's metrics diverge from the rest of the market, that's your signal. Numbers whisper before narratives shout. Next, look for language shifts. Every new wave comes with new words. Roll-up, restaking, modular, real yield, account abstraction. At first, they sound technical. Then they become buzzwords. Follow GitHub commits, research blogs, and governance proposals. That's where those words appear before they hit Twitter. The people who control vocabulary control attention. Third, follow infrastructure upgrades, not just tokens. When protocols like Chainlink, Arbitrum, or EigenLayer roll out new features, they create new narratives for others to build on. For example, EigenLayer didn't just create a restaking market. It enabled an entire category of actively validated services. Infrastructure launches are like software updates to the crypto economy. They quietly shift what's possible. Fourth, track capital flow, especially from institutions. If venture funds, exchanges, or stablecoin issuers start allocating to a niche, that niche is about to trend. Venture capital doesn't chase headlines, it creates them. By the time a 16Z or Coinbase Ventures starts tweeting about something, they've been funding it for months. Fifth, watch developer concentration. If multiple teams start solving the same problem from different angles, it's a narrative forming in real time. That's how modular blockchains and real-world assets both started, as isolated experiments that converged into themes. Now, here's the hard part. Most early signals will fail. You'll track 10 sparks and maybe one becomes a trend. That's fine. Narrative hunting isn't about being right every time. It's about being early enough that when you're right, it matters. The cost of being wrong is time. The reward of being right is asymmetric. Let's connect this to investment behavior. Narrative detection doesn't mean FOMO. It means timing your curiosity. When a sector is quiet, research deeply. When it's loud, step back and measure attention. The best analysts don't chase momentum. They map it. So how do you build a personal framework for this? Here's a practical checklist you can apply weekly. 1. Check category-level data. Which sectors are gaining TVL or volume faster than the market average? 2. Scan social media velocity. Which words or projects are getting 3 to 5 times more mentions week over week? 3. Review funding rounds. Which verticals are attracting capital quietly? 4. Map narrative maturity. Where are we in the 4-phase cycle? Spark, validation, amplification, or saturation? 5. Track correlations. If multiple projects in one niche rise together, it's not random, it's narrative alignment. If you repeat this process weekly, you'll start seeing patterns. You'll notice when a theme moves from builders to influencers to traders. That's when you know the wave is coming. And instead of reacting, you'll already be positioned. The irony is that trend hunting isn't about hype. It's about discipline. It's not about guessing what will pump next week. It's about recognizing attention migration, where energy is flowing before the crowd arrives. Because markets are just attention maps with money attached. And here's the final rule. When everyone is talking about a new trend, ask yourself, what's next because of this? Every narrative creates another. DeFi created the need for scaling. Scaling created the need for modularity. Modularity created the need for restaking. Restaking created the need for shared security. That's how you ride multiple waves with one compass. So, can you really catch narratives before they go viral? Yes, if you stop treating trends as accidents and start treating them as data flows. Trends don't appear overnight. They grow like plants, slowly, predictably, from the soil of attention and liquidity. This is not financial advice. It's a framework for building your own radar, to see stories forming before the crowd does, and to understand that in crypto, the earliest signal isn't price, it's curiosity.